Ladies and gentlemen, good day and welcome to Indoco Remedies Ltd. Q4 FY24 earnings conference call hosted by Nirmal Bang Institutional Equities Private Limited. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing the star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Umesh from Nirmal Bang Institutional Equities. Thank you and over to you, sir.
Thank you, Steve. Good afternoon, everyone. On behalf of Nirmal Bang Institutional Equities, I welcome you all to the Q4 FY2024 earnings phone call of Indoco Remedies. I would like to thank the management of Indoco Remedies for giving us this opportunity to host the call. Today, from the management, we have with us Ms. Aditi Panindikar, Managing Director, Mr. Sandeep B. Bambolkar, Joint MD, and Pramod Ghorpade, CFO. I now hand over the call to management for their opening remarks, after which we will open up Q&A. Over to the management.
Thank you, Mr. Umesh. I am Pramod Ghorpade. Good afternoon, everyone. Thank you all for joining this call today. Let me draw your attention to the fact that on this call, our discussion will include certain forward-looking statements, which are projections or estimates about our future events. These estimates reflect the management's current expectation of the future performance of the company. Please note that these estimates involve several risks and uncertainties that could cause our actual results to differ materially from what is expressed or implied. Indoco does not undertake any obligation to publicly update any forward-looking statement, whether as a result of new confirmation, future events, or otherwise. Thank you very much. I will hand over mic to Aditi Madam for her opening remarks.
Good afternoon, everybody, and thank you for joining us. It is our pleasure to discuss with you the performance of the company this quarter as well as for the whole of the financial year 23-24. To sum up in a sentence, this has been a year for Indoco of many hits and a few misses. And since the few misses seem to overawe our financial performance, I would like to speak about the various pluses that we've had this year. To start with, in the month of March, we commenced manufacturing in our 100% subsidiary Warren Remedies Private Limited. Earlier in the month of January this year, the largest brand of the company, Cyclopam, crossed 150 crore revenues as per IQVIA. Other two brands of the company, Oxipod and Cital, have each also crossed 100 crore mark for the company. In addition to that, given the company's philosophy to increase sales from subchronic segments, this year we have launched a second division for ophthalmology called Vision in a pan-India manner. Launch of Vision will allow us to launch products in the anti-glaucoma therapy in the Indian market. In addition to all this year, happy to share that the organization has received the Digital Health Innovator Company of the Year Award for the 360-degree promotion of Sensodent K brand through comprehensive digital strategies at DigiPharma X 2024 event. In addition to digital promotion, we are happy to share that earlier this month, Sensodent K has also gone live on television channels to establish a broader reach to our end consumers. API division of the organization has registered a year-on-year growth of 79% at 126 crore. The organization continues to keep its focus on IT-enabled services, and this year we have executed the HRMS software SAP success factors, which will help us improve systems and controls across the organization. And most importantly, and this is very, very new news, as of 2 hours ago, happy to share that our API Kilo Lab manufacturing facility and Indoco Analytical Services Testing Lab has successfully cleared the US FDA audit with 0483s. Thank you. That is all from me. I now hand over to Mr. Sandeep to share financial highlights for the quarter and year.
Good afternoon, everyone. Hope you all are doing fine. Let me begin with the business highlights. Net revenues of the company for the fourth quarter FY2023-24 grew by 1.7% at rupees 4351 million compared to rupees 4280 million same quarter last year. For the year, revenues grew by 7.6% at rupees 17,619 million as against rupees 16,381 million. EBITDA to net sales for the quarter is 13.2% at rupees 574 million compared to 15% at rupees 642 million. EBITDA to net sales for the year is 14.6% at rupees 2580 million compared to 17.4% at rupees 2849 million. Profit after tax to net sales for the quarter is 8.6% at rupees 376 million compared to 5.9% at rupees 254 million same quarter last year. PAT to net sales for the year is 6.6% at rupees 1166 million compared to 8.6% at rupees 1414 million. Earning per share for the quarter is rupees 4.07 compared to rupees 2.75. EPS for the year is rupees 12.64 compared to rupees 15.32. Above numbers are on standalone basis. We have declared results with consolidation which include results of subsidiaries. Domestic formulation business. Revenues from domestic formulation business for the quarter grew by 3.6% at rupees 1,911 million as compared to rupees 1,845 million. Major therapeutic segments, namely stomatology, ophthalmology, vitamins, urology, and cardiac, performed well during the quarter as compared to the same quarter last year. On the international formulation business front, revenues from this business witnessed a degrowth by 1% at rupees 2,140 million compared to rupees 2,162 million. Revenues from regulated markets for the quarter are at rupees 1,458 million as against rupees 1,634 million. Revenues from US business for the quarter are at rupees 675 million against rupees 713 million. Revenues from Europe for the quarter are at rupees 765 million against rupees 821 million. Revenues from emerging markets for the quarter grew by 29.1% at rupees 682 million as against rupees 528 million. Revenues from API business for the quarter are at rupees 217 million as against rupees 228 million. Revenues from Anacypher CRO and Indoco Analytical Solutions for the quarter grew by 85% at rupees 83 million against rupees 45 million. That's all about the business highlights and the financial numbers. I now request all the participants to put forth their questions. Thank you.
Thank you very much, sir. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Participants are requested to press star and 1 to ask a question. Thank you. The first question is from the line of Rohan Shukla from Anand Rathi. Please go ahead.
Hello, am I audible?
Yes.
Thank you for giving me this opportunity. So I just had one question regarding FY25 about what will be the capex plan or the R&D plan that you have. Is there any ballpark figure that you can maybe provide?
Your voice was a little blurred. You're talking about capex and which are the plans?
R&D, like any particular amount that you have planned, any ballpark figure.
Okay.
For R&D?
Yeah.
Yeah, go ahead.
R&D, roughly the company has been investing in the range of 5 to 6% of its sales. We shall continue that. Regarding capex, including our various manufacturing sites, maintenance capex, as well as any other repairs and a few additions, we should be able to manage within about 250 crore.
Okay. And my second question is about the sustainable EBITDA margins going ahead in the next 2 years by FY27. Are these EBITDA margins going to be at the same level or is it going to fluctuate?
So they have to improve from here, quite honestly. This year was a one-off year for us. If you look at our performance in India business, only 2 therapeutic categories, anti-infectives and respiratory, pulled us down. And that has been the case in the covered market as well as for IPM. Given that we have such a large contribution coming from these 2 therapy areas, we have been impacted. But company has made many strategic initiatives to reduce dependence on pure acute therapy. And I'm confident going forward, we will see more and more contributions coming from subchronic and chronic. So that should help us post better EBITDA. In addition to that, for international business also, there is a master manufacturing efficiency improvement plan which is under execution. We expect by the end of first quarter this year or halfway through the second quarter at least, we will start seeing impact of that. That would also help us to improve margins on our international business. So therefore, going forward, I feel very confident we'll be able to improve our EBITDA.
Okay, that answers my question. Thank you. I'll get back in the queue.
Thank you. Ladies and gentlemen, who wish to ask a question may press star and 1. Participants who wish to ask question may please press star and 1 at this time. The next question is from the line of Rashmi Shetty from Dolat Capital. Please go ahead.
Yeah, thanks for the opportunity. Just want to know that in this quarter, our other expenses was pretty high. So if you can call out what was the remediation expense and excluding remediation expense, whether the other expenses was high, then what is the reason for that? And gross margin was, on quarter-on-quarter basis, it has actually come down. So if you can explain the reason for, lower gross margin also.
Yeah. So remediation expenses are in the range of around 5 crore, which is what typically we've been doing every quarter. I think the rest of your question was on other expenses.
So including the remediation expenses, why the other expenses is up?
Yeah. So as I mentioned in my opening remarks, this year we have gone all out with promotion of Sensodyne KKF.
Okay.
Hello, ma'am. Your voice is not audible. Ladies and gentlemen, we have lost the line for the management. Please wait while we reconnect them. Thank you. Ladies and gentlemen, thank you for holding. We have the management line back with us. Hello, Rashmi. Are you there on the line?
Yes, I'm there.
Okay.
So maybe we can move to the next question.
Okay, ma'am. Okay.
Hello?
Yes.
Yeah. So, ma'am, just want to know about the other expenses. I was waiting for the answer that excluding remediation expenses, other expenses were pretty up. So you mentioned you were talking about promotion of Sensodyne and then the call got cut.
Okay, I'm sorry, I just repeated the whole thing. Maybe you were not logged in at that stage. So I said that we have spent more on sales promotion because of the reach we have tried to create through digital media. And that has also caused increase in other expenses.
Got it. And then the reason for lower gross margin? Gross margin.
All this has contributed.
Yeah.
All this has contributed to lower gross margin.
Rashmi, in India business sales, today Indoco's operations are of a stature where we have to get a minimum certain degree of top line to be able to get returns. So principally for India business, we have got impacted in the respiratory and anti-infectives area, because of which Febrex Plus, ATM, Oxypod have not done well. In international business in particular, the organization for the US market, as you know, we have acquired SPP, and there has been a kind of shift in our business model in US. So historically in the past, we used to license out our dossiers and collect milestones against it. So when you collect milestones, naturally that does accrue into your margin immediately. So this year what you see is more of the IP has been kept for ourselves. I'm very confident in future as time goes by and as we launch these products on our own through SPP, Indoco will be able to show much better margins.
Okay. And ma'am, next question is on Europe business and US business. US, I understand that, you did well this quarter also, and we have actually achieved the guidance of around 300 crores. But in Europe, in quarter 4, the growth was, we have actually shown a decline. So if you can, and we have not achieved our guidance also. So, this particular segment, what is the reason, what challenges we have faced during the quarter, and what are you expecting for FY25?
Yeah. So Rashmi, if you look at Europe's performance on a sequential quarter, basis, we have actually improved. You might have heard us in our earlier conversations also that this year we had certain disruption for paracetamol orders to UK. Although there is revival, we have not been able to completely catch up. So when you compare this quarter 4 with last year's quarter 4, you will see a dip. But if you study performance over quarter 3, there is a substantial growth.
What is the number for Europe sales, if you can give, because that is not there in the presentation.
Okay, for the whole year, quarter 4 is 76.4 crore.
76.4 crore in Europe, and for whole year it is?
For whole year it is 277 crore.
Okay, ma'am. And how are you looking it for FY25?
We should be able to post around 15 to 20% growth.
Got it, ma'am. And any guidance if you can give on the overall sales figure for FY25? Like, we are expecting recovery across businesses. The business should come back on track. And EBITDA margin, we have posted 13% versus earlier what we used to do more than 17-18%. Taking into account that, we will be doing the remediation activities also, remediation expenses, promotional expenses. Based on that, what do you expect? How many basis points can we improve from here on?
So, Rashmi, I do not give guidances anymore, not for sales and not also for margin. But as you yourself said, I think you have listed out the various reasons why our EBITDA margin should improve going forward. So, as I said, there has been, there is one product, Fabric Plus in particular, which degrew by 10% in the year, has impacted India business performance. Otherwise, we would be doing much better than this. One product, paracetamol, has impacted Europe performance. And the shifting business in US, which I explained earlier, has resulted in lower margin overall for the international business. But going forward, as we get more and more sales coming from Florida Pharma against our own products, as our corporate in India is able to give better performances from other subchronic products, in addition to, we have got some very robust brands in India business in acute also. For example, Cital and Cital UTI, its brand extension. Totally now the brand is more than 100 crore. It has grown by 19% this year. Cyclopam, the parent brand, has grown by 3%, but actually we have rejuvenated the brand this year. So there are many things going on, and I feel very confident that we will be able to, post a decent growth and show very good improvement in margin going forward.
Okay, ma'am. Thank you. That's it from my side.
Thank you. Ladies and gentlemen who wish to ask a question may please press star and 1 at this time. Participants who wish to ask question may please press star and 1. Thank you. The next question is from the line of Aditya Khemka from InCred PMS. Please go ahead.
Yeah, hi. Thanks for the opportunity. Am I audible?
Yes.
Okay. Thank you, ma'am. Hi to meet you. So, two questions. Firstly, in the India business, if you exclude Fabric Plus, what were the other brands going around, a ballpark number?
So, I will give you of the top 5-6 brands off my head. Cyclopam grew by 3%, Sensodyne K by close to 16%, KS by 18%, Cital 18.5%, Rexidin mouthwash, Kidodent, everything is in double-digit growth, Aditya, all except Fabric Plus, and within that also, it is the Fabric Plus suspension which has degrown heavily, and that is the character of the entire therapy basket for the covered market. In addition to that, ATM has shown a single-digit degrowth, and Oxipod has also not grown well. So it is just these 3 brands.
Understood. And ma'am, for these 3 brands, Citalopram, Fabric, and Oxipod, are we, market share-wise, are we sustaining market share, losing market share to competition?
No, we are sustaining.
Sustaining. Understood. And a question on the US business plan. So you said obviously because of the milestone payments no longer being there as we have our own subsidiary. But so how do we, so when we transfer products to our own subsidiary and they then sell into the US market, our realization should have actually gone up, right? Because we are no longer parting with the margin that we used to pay to the front-end partner.
So Aditya, FPP has only started selling our products just recently. We have not got much impact for the whole year yet. And that would come in the consolidated. So I am confident that next year we will see impact of that. So you will see us transfer the product at a certain price to FPP and then FPP will further sell. And for FPP to sell them for the entire year, then we will see the impact.
Understood. Sandeep sir, on the European business, what is the utilization that we stand on for the microlabs plant, that plant that we acquired?
It's around 50%.
50. And how many products do we currently sell in the European region, and how many new launches do we plan to do in the next year?
We are selling about 10 products in the European region, and next year we should be adding another 4.
Another 4. And would you have a number in terms of how much utilization can improve for the microlab plant?
Aditya, the 50% utilization of capacity is also because of paracetamol orders not coming to that scale this year. Otherwise, we were doing in excess of 70%.
Yes.
And do we have visibility back on the paracetamol tender as to whether the volumes will come back or are they gone for good? What is exactly happening in the end market?
No, they're not gone for good.
They're not gone for good. We have visibility. Orders have started coming in, and they should accelerate within 15 days to 1 month.
Understood. 2 more questions, ma'am, both relating to the US business. What is the situation with Combigan and Brinzolamide? I mean, market share-wise, utilization-wise, where do we stand on those 2 products?
Currently, Aditya, our lines are under refurbishment. So all this refurbishment business will get over by late August or mid-September. As you know, we are under OAI status, and to correct that, we have to do all the refurbishment of all the lines. So once this is over, we'll be back in business.
And you expect the refurbishment to be finished by mid-August or late September?
Yeah.
Okay, August or September. Okay. And last question on the US business. So, with the US FDA, the conversations around re-inspection, would that only happen once you have done the refurbishment, or can it happen earlier?
So on a regular basis, Aditya, we send updates to US FDA because there are various things which we have committed as part of the plan. And as and when they get executed and as data gets generated, it is regularly updated. Of course, the completion of the last update is likely to be around July, August, after which I believe they will, plan a date for visit.
Understood. That's all from my side. Thank you, sir, and thank you, ma'am. All the best.
Thank you.
Thank you. A reminder to all participants that you may press star and 1 to ask a question. The next question is from the line of Umesh Lara from Nirmal Bang Equities. Please go ahead.
Hello?
Yeah.
So, ma'am, you said that you have increased your distribution, or rather your penetration into the Indian market. So, are we looking for any distribution agreements with any of the company for their brands?
No. I think you didn't get me right. 95% of our sale in India currently comes against ethical sales, that is promotion to doctors and generation of prescription. I said for 2 brands in the dental segment this year, we have gone beyond promotion to doctors to try and create a reach to the consumer directly, for which we have undertaken digital marketing to reach the consumer. Because going ahead for products like desensitizing toothpaste, there is enough evidence of how a market beyond ethical market has been created by certain other players like Sensodyne, and that is a much larger market, and we now aspire to get a pie of that.
Okay, ma'am, got it. And also, ma'am, one more thing. You mentioned about the 4 new launches in European market. So, can you give an idea or rather a picture onto it?
In terms of what?
In terms of the market sizing and what could be, the contribution into our sales from those orders?
I'll tell you something. Our endeavor is to reduce our dependence on paracetamol. That is the main thing. So we are launching various products in various therapeutic categories whose margins are far, far better than paracetamol. That's the main aim, and capture maximum market share from all these. So I think more details will diverge as and when the right time comes.
Okay, sir, got it. And also, the one more thing I wanted to ask is that are we facing some pricing pressure when it comes to export markets?
Not really.
Not really, not evidently. Of course, there is competition, but there's no evident pricing pressure.
Okay, and do you expect the same situation to play out for the FY 2025?
At least as far as US market is concerned, knowledgeable sources say that prices have bottomed out. So from here on, things should only improve.
Okay.
We have several strategies in place for US, Europe, everything, but we will diverge it at the right time.
Okay, so got it. And so just one last question. Are we going to focus more on the chronic or like targeting some particular segment, or we will just be focusing more on subchronic segments and into digital promotion?
Actually, we've been doing various things parallelly. So there is our division Synergy, which focuses on chronic areas of diabetology, cardiology. This year we have actually expanded its presence by adding another 120 people and creating better coverage in metros. So we are very much focused on chronic. We are also focused on subchronic. And in acute also, I'm not saying acute products are not good or anything, but given that there is so much dependence on seasonality and external factors, it is strategically that we have decided that contributions from subchronic and chronic going forward will be increased.
Okay, ma'am. Thank you, ma'am.
Thank you. The next question is from the line of Vishal from Systematic Group. Please go ahead.
Thanks for the opportunity and good evening, everyone. With respect to your out-licensed products in the US, so will all these out-licensed products ship to your front end going forward, or the ones that are already out-licensed will remain out-licensed and only the new products will ship to the front end?
Yeah, the old relationships continue as it is, and all the new introductions will be, of course, through FPP.
Got it. Okay. And any guidance on the number of approvals that you expect in US in FY25, and would all of these be oral solids?
3 to 4 we should get, and while we hope a few come in the sterile also, given if FDA is able to come down, audit and change the status, we can hope for that, but otherwise yes, largely oral solids.
Okay. And the emerging market, could you share some color on why the emerging market was so strong this quarter, and would this remain so for the coming quarters?
Yeah, it's a sustainable business model. So we are doing business in Africa, Southeast Asia, Latin America, and to some extent CIS and Middle East. But the main strong points are Africa and Southeast Asia and Latin. So these are sustainable countries, and we have been growing continuously and sustainably. Notably Africa, French West Africa, Kenya, Tanzania. There the growth has been very good, and emerging market growth has been CAGR for the last 4 years has been 24%. So numbers should talk for themselves. And this geography we will continuously focus on. And there is a specialized team dealing with this geography. We have medical reps on the ground, more than 150 in French West Africa in 8 countries. In Kenya also we have 32 medical reps, in Sri Lanka 22. So we are promoting brands. That is the beauty of this business. So it has to be predictable.
And you've been adding MRs, or this number that number has remained constant this year?
This number is sustainable. I think this year we will not add any MRs.
Okay. And specifically, is it the French West Africa market that contributed to the strong growth in the emerging market region?
Yes, to some extent. French West Africa, Kenya, Tanzania, Sri Lanka and Myanmar were the main countries. And in Latin America, it was Chile, Bolivia, Colombia, these 3 countries.
So LATAM has opened up for you now, or you have been in LATAM for a long time?
We have been in LATAM since 4-5 years.
Okay. So can we assume 68 crores this quarter, should we assume a similar run rate for the upcoming quarters, or this will be volatile?
So generally emerging markets is about primaries being done from here, and then secondaries and tertiaries happening in those markets. And as you know, for year end there is certain amount of pressure from the sales guys, so we do get little elevated primaries. But I think we should comfortably, if you look at the previous quarters, we had done 47 crore, and the one before that was 45. So from there, I think easily a rate of around 50 to 55 can be got per quarter.
Got it, ma'am. Thank you. That's all from me.
Thank you. The next question is from the line of Madhur Rathi from Counter Cyclical Investments. Please go ahead.
Thank you for the opportunity. I wanted to understand what was the paracetamol revenue for Q4 and FY24?
Exactly, paracetamol, just give us a minute. Do you have any other questions?
Yeah, I wanted to understand, you are not giving any guidance, ma'am, but if you could just give a broad path range, where do we see our margin going forward for the next 2 to 3 years? Not FY25, but the next 3 years, where do we see our margin going? A broad range would work.
Yeah, let me answer your para question first. So in the fourth quarter we did 37 crores from paracetamol, and same last year was 46 crores. So there was a dip. Okay, but it was superior to the 30 crore in the immediate preceding quarter. Okay, what was the second part of your question? I'm sorry.
I wanted to understand our margin guidance, not particular guidance, but a range where we see our margins going in a steady state basis.
Okay. So pre-COVID, we had done EBITDAs of 18%, rather 17% during COVID, because there was less sales promotion, there was no travel, and a lot of other expenses were limited. We did very good EBITDAs in excess of 18.5%, 19% also. After that, it came down to 17, and this year in particular, it further came down because of all the things that we have discussed till now. I feel very confident that we should be able to bounce back to 17 to 18% over the next 2 years.
Okay, thank you, and all the best.
Yeah.
Thank you. A reminder to all participants that you may press star and 1 at this time to ask any questions. Thank you. As there are no further questions, I would like to hand the conference over to the management for closing comments.
Yeah, thank you very much, everybody, for joining us on this call. as I mentioned before, and because I got no questions on it, let me reiterate, and because we are very excited, we just closed out a US FDA audit of our API kilo manufacturing facility and our Indoco Analytical Services, the services US FDA approved public testing lab at Navi Mumbai, and with 0483. Thank you very much. Have a good evening and the rest of the weekend. Thank you.
Thank you.
On behalf of Nirmal Bang Institutional Equities, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.
Thank you so much.